Lithium Americas Corp, ticker LAC, is currently trading live at $4.96, up 8 cents, which is a gain of 1.64% on the day. Now, seeing a small green number next to a stock that has been in a free fall might feel like a tiny bit of relief, but for most people watching Lithium Americas, the expectation is simple. This is a broken stock in a broken sector. It's a pure speculation play, a lottery ticket on the future of electric vehicles that has been torn up, crumpled, and tossed in the bin. The entire lithium space has been decimated by a collapse in commodity prices, and LAC is down so much from its highs that many have written it off completely. The narrative is that this is a company that might not even exist by the time its flagship project is supposed to be built. But what if the reality, what's happening on the ground in Nevada right now, is telling a completely different story? What if the market is so focused on the spot price of lithium carbonate that it's missing the fact that this company just quietly de-risked its entire future? The real story here isn't about today's lithium price, it's about cash, construction, and concrete. Just a few weeks ago, in late October, Lithium Americas confirmed it received its first drawdown from the U.S. Department of Energy. This wasn't a small amount. This was $435 million, the first piece of a massive $2.23 billion conditional loan. This is the government effectively placing a massive multi-billion-dollar bet that this project, Thacker Pass, will be built. This isn't just a mine. It's being treated as a piece of strategic national infrastructure. Let's establish the common ground because the pain here is undeniable. If you're an investor who bought this name a year ago, you've seen nothing but red. The stock is a long way from its 52-week high of over $10 and not terribly far from its 52-week low of $2.31. We saw a brutal one-month drop of nearly 40% recently. The macro picture is just as ugly. The global lithium market is swimming in oversupply. Prices for battery-grade lithium carbonate are hovering around $10,000 per metric ton, a catastrophic fall from their peaks of over $80,000. When this is the headline, it's no wonder that every pop in the stock is seen as a dead cat bounce. It's easy to look at the trading action on platforms like the Robinhood app or SoFi Invest, see the volatility, and lump this in with every other high-risk junior miner. The expectation is that this company is in a race against time, burning cash it doesn't have, all while the value of its end product has collapsed. The narrative is that even if they can build it, what's the point if they can't make a profit? That's the story, and it's a powerful one. It's also, quite possibly, wrong. The contrarian take, the deeper reality, is that this is no longer a typical mining speculation. The game has changed. This is now an execution story, fully financed. Think about what that $2.23 billion DOE loan plus the massive investment from General Motors actually means. GM isn't just a customer. They are a 38% joint venture partner in the Thacker Pass project. They have an offtake agreement to buy 100% of the production from Phase 1 for 20 years. GM's investment, combined with the DOE loan, means the $2.9 billion plus needed to build Phase 1 is largely spoken for. Lithium Americas is not going to run out of cash. This isn't a company scrambling to survive. It's a company that is now fully funded to build. The market has been treating LAC like a company that needs to find financing, but the reality is the financing has been found. The question has shifted from if to when, and the when is already happening. Construction at Thacker Pass is underway. There are 300 workers on site right now. Major concrete placements have been happening since May. Fabrication of the structural steel for the processing plant began in April. This isn't a blueprint or a PowerPoint presentation. This is a massive, active construction site. The company is targeting mechanical completion in late 2027. This is the reality that the market is struggling to price in. This is why we're starting to see a significant shift in the analyst community, even while the retail sentiment remains terrible. Last week, JP Morgan upgraded LAC from underweight to neutral, setting a $5 price target. They explicitly noted that the significant sell-off had brought the stock to a fair valuation. BMO Capital and TD Cowen also chimed in with $5 price targets, maintaining their hold or market perform ratings. Now, a hold rating doesn't sound exciting, but you have to read between the lines. When a stock has been in a death spiral, analysts moving from sell to hold is a major event. They're not saying buy because the execution risk is still massive. Building one of the world's largest chemical processing plants is incredibly difficult. But they are saying the financial risk, the existential risk, has been dramatically reduced. The market is beginning to recognize that this isn't just a bet on lithium prices, but a bet on a fully funded, government-backed infrastructure project. This isn't some tiny position in a diversified Fidelity mutual fund. This is a concentrated, high-stakes play. Institutional owners get this. General Motors Holdings LLC is one of the largest shareholders, for obvious reasons. We also see 238 other institutions on the books, including firms like Van Eck, who are all making a calculated, long-term investment. They're not trading this day-to-day on the Robinhood stock trading platform. They are building a position for 2028. So what does Lithium Americas actually do? It's crucial to understand this, especially after the company's recent separation. The old Lithium Americas split into two. The part that trades under LAC is Lithium Americas NewCo. This company is a pure-play bet on the United States. Its only asset is Thacker Pass in northern Nevada. The other company, Lithium Americas Argentina, holds the South American assets and trades under a different ticker. So when you are looking at LAC, you are looking at one thing and one thing only: the development of one of the largest and most strategic lithium deposits on the planet, located entirely on U.S. soil. The business model is not to just dig up ore and ship it. The plan is to build a fully integrated production site, taking the raw lithium-bearing clay and processing it all the way to battery-quality lithium carbonate on site. This is a massive chemical engineering challenge, and the clay-based extraction method is still considered novel at this commercial scale. That's a key risk. But if they pull it off, LAC becomes the cornerstone of an independent American EV supply chain, a goal shared by both General Motors and the U.S. government. This is a level of strategic importance that you just don't see in other mining stocks. It's a completely different animal than a big, stable blue chip like Apple stock or a high flyer like NVIDIA stock. This is a long-duration asset play, and it requires a different mindset, one perhaps better suited for a long-term individual brokerage account at a place like Fidelity or Schwab Intelligent Portfolios. This brings us to the future outlook, the ultimate test of expectation versus reality. The bear case, the expectation, is clear. First, execution risk. The project faces delays, construction costs balloon past the $2.9 billion estimate, and the novel clay extraction technology fails to work at scale. Second, lithium prices. What if the oversupply lasts forever? What if EV demand, which has seen some wobbles, sputters out? What if Tesla stock's recent struggles are a sign of a broader EV winter? In this scenario, LAC completes its project in 2028 only to find a market that doesn't need its lithium, or at least not at a price that makes the multi-billion-dollar investment worthwhile. It's a terrifying and plausible risk. But then there's the reality that the bulls are betting on. This case states that the current lithium glut is temporary, a normal, cyclical part of a commodity market. The EV slowdown is a blip, not a trend. The real demand surge hasn't even started. By 2028 to 2030, when Thacker Pass is ramping up production, the world will be in a state of a massive lithium deficiency. All the gigafactories being built by GM, Ford, Toyota, and everyone else will be screaming for supply. And in a world increasingly fractured by geopolitics, supply from a stable domestic source like Nevada will command an enormous premium. In this reality, the U.S. government and GM don't just look smart, they look prescient. They will have secured a foundational piece of the entire country's new industrial base. The bet is that by 2028, no one will care what the spot price was in 2025. They will only care about who has a secure, long-term supply. This is the tension at the heart of LAC stock.